My name is Adrian Navarre, the CEO and founder of Ticker Trends. I wanted to make an updated overview and pitch video on the Social Arbitrage Fund, which is our US-based Dallas, Texas private hedge fund. At the Social Arbitrage Fund, we operate a very unique strategy, which has been exceedingly successful over a very long period of time, as well as operating a very exciting data business. So in this video, I wanted to go over some of our strategy in the fund, some of the things that you would need to know if you're potentially interested now or in the future in getting involved in our hedge fund, and what we do in general and some of our goals. First, I want to start by saying that since we are a US-based Dallas, Texas hedge fund, this does mean that we can only accept accredited investors and qualified clients. This is basically just a set of rules that defines certain minimum net worth requirements to essentially classify you as a knowledgeable investor. Assuming you meet these requirements, we are allowed to accept investors from both inside the US and outside the US. In fact, most of our investors are international, so if you are from overseas, outside of the US, and you are looking for an interesting hedge fund, an emerging manager, or an earlier stage hedge fund to get involved in, then we can be a great fit for you. If you're not familiar with Ticker Trends and Social Arbitrage and what we do, Ticker Trends is both a data business and asset manager. So we are very unique in that we actually create, manage a lot of the software that we use directly within the fund, which is exceedingly different than many other funds. And just to go over a little bit of what we've done on the data business and the software side outside of the hedge fund, our data business has raised external capital, venture capital money in order to develop and improve our systems over time. And not only that, but a wide number of external hedge funds use some of our infrastructure and data within their hedge funds themselves. So our infrastructure and what we provide is essentially proven to be valuable. A lot of other hedge funds can pitch you on a certain method or technology that they use, but they're not able to prove with external validation that what they're doing is valuable. We are very different in that we can actually show you that we have customers, other funds, other asset managers that are interested in our data and our technology because they see the edge and the value that it provides to them. Just to go over some of the things that we offer, we operate a data terminal visualization platform to view and analyze alternative data sources. We also sell direct raw data access. One of our clients that we've started working with now for raw data access is one of the largest quant funds in the US. So we have very large users with over $30 billion plus in AUM that utilize our services on our software side. And this is the same technology, knowledge, infrastructure that we build on top of to use within our own fund, being the Social Arbitrage Fund. On the Social Arbitrage Fund side, we've been operating this business now since April 2024. And as of this video, we have about 8 months of live track record within the fund. An important note on this side as well is that within the fund, a majority of our capital currently is from a fund of funds. So this is also unique as we are not just here saying that we've only accepted private investors' capital, but we also work with a fund of funds, which makes up a majority of our capital. And of course, fund of funds have to be very knowledgeable investors in order to decide which fund to invest in. So now that I've gone over some of the stats and things that make us different at the Social Arbitrage Fund, now I'll dive into our strategy and what we actually do within the fund to make outsized returns. So what the Social Arbitrage Fund focuses on is this idea of social arbitrage. First, I'll go over the very basic concept of social arbitrage, and then I'll describe how we utilize this in our technology and methodology when actually applying this to markets in real time. The idea of social arbitrage is essentially using data points and information that is very niche or only specific to those who follow certain businesses very closely to gain an edge in the market. So an example of this would be something that I like to say from my own personal experience is I used to work at a robotics company. And within that robotics company, we would work with certain suppliers or businesses for our technology that only someone working in robotics would be knowledgeable on. That gave me an edge when investing in certain technology businesses because I knew, based on the robotics company's own needs and purchases, what was best in the industry at that time. I knew industry trends very, very closely. Now, what we try to do at the Social Arbitrage Fund is do that at scale through the use of alternative data. So essentially, we purchase, aggregate, and collect data from many, many different public data sources to gain information on what consumers are interested in at scale. But we're not just doing this in a typical sense, being where many funds, they tend to purchase things like credit card transaction data, or point of purchase data, which is essentially when someone actually purchases something. What we're more interested in are those niche data points and those nonlinear data points that those funds overlook. So when these other funds try to gauge the success of a certain business, they're using those very direct data points, and there's a lot of noise and inaccuracy within those data points. What we do instead is we collect data on a very broad scale to be able to find those long tail keywords and trends, social movements, information, knowledge that those funds don't care about and are not looking at, and we price that information into the market. That is a very, very large overview of what we do at the Social Arbitrage Fund. The other element of what we do outside of just tracking consumer demand, social trends, and what people are interested in general, and all those long tail keywords, is we also track the sentiment and saturation of information in the market. So this is very much a double-sided strategy, and that's why we call it arbitrage. Is essentially we're trying to look for an information asymmetry between what we know about a certain business or product or brand and what the market thinks about that business, product, or brand. So this can be things like the expectations for a certain quarter's earnings, all the way to news sentiment of how investors talk about the company, what investors think the company will do in the future. Many things like that can impact our view in what we think about our data. So essentially, to give a more clear example of this, if there is a business that has a very large new social movement that has not occurred before, and we're able to see this in our data, and maybe for this transaction data that these other funds are tracking, it's not showing up, or it's showing up in a much smaller way. They're going to be looking at that inaccurate data and have maybe a skewed view of what they think of that company, where our data shows a different information. What we are then going to do is we are going to quantify how large this informational difference is between what our data and information is saying and what the rest of the market thinks. Then that determines our conviction, our position sizing, how we structure our portfolio, to be able to say, okay, across 20 different opportunities with the same methodology, where do we allocate capital, and how do we diversify it across many different opportunities. In addition to this, we use a very high level of hedging and try to decrease our correlation to the market as much as possible. So as much as this strategy is exceedingly good at identifying mispricings in the market, it's also very important for us to be decorrelated from the market as much as we can, because we just want to be trading based on our knowledge rather than other external factors that are out of our control. So to give some examples, if there is a CEO that has a certain scandal that happens to them, or if a business has new tariffs that go onto them, or maybe even if anything happens that's outside of the control of our data, we don't want that to negatively impact the portfolio. So the way that we structure our positions is, one, diversification across many different opportunities that qualify under our characteristics that we want to trade in, And then two, we also want to hedge out general market volatility. So if the market goes down 20% one year, if there is interquarter volatility, if any individual thing, broad thing happens in the market, whether it be macroeconomic, whether it be company specific, we try to hedge that out and decrease that's our exposure to those opportunities as much as possible, to focus purely on the accuracy of our decisions based on the idea of social arbitrage. So that's an overview of our strategy, risk management, and hedging that we use within the social arbitrage fund. Now let's talk about how this is actually performed in practice in real time. Since the launch of our fund with private investors' capital, as well as the fund of funds capital, we have now had 8 months of live track record with this strategy. One thing I do want to clarify, as noted in this graphic here, is that the first 2 months of this track record do include only the track record from the fund of funds managed account, whereas the following 6 months of track record includes the performance from the full social arbitrage fund as well. Since this period and since inception of the fund this year, we have been able to generate roughly 28.27% of returns. And I'm very excited for subsequent months of returns. As I know, in fact, right now this is December 19th. I believe that we will be able to post strong returns as well this month. What's very exciting about these returns, and what we will show more and more over time, is our lack of correlation to the broader market because of the things that I mentioned before. When we see months like this 10% month that we just posted in November, or even, for example, a month like July where we had more of a loss. We had a 3.8% drawdown in July. When these things happen, this is not necessarily based on the performance of the broader market, but instead the accuracy of our decisions during that period. So reflecting on our returns to this point, July was a period where we were making decisions within our strategy that turned out to be inaccurate. Essentially, we were wrong. And what we do when we're wrong is we take those things and we adjust our strategy to account for that. So since then, we've made significant improvements in how we view markets and how we're applying this strategy in real time in our portfolio to improve the consistency of what we're doing. But what I really like about that is that shows that what's happening within our portfolio is not what's happening in the market. And I hope to show this more and more over time as we see months where potentially the market is red, but we're green, or the market is green and we might be a little bit red. But to me, as someone who, looking externally, if I were to be looking at a hedge fund or a private emerging manager to invest in, I would want to know that I'm investing in that emerging manager strategy and not some random market volatility or macro correlation or just levered exposure to the S&P 500, because that's exactly what I would not want to get out of that fund. So what we hope to provide within the social arbitrage fund are returns which express a very high level of asymmetry. So although there could potentially be months where we have a drawdown of 1, 2, 3%, or however much, and of course we limit that as much as possible with our hedging strategy and how we apply our positions in the actual market and our diversification. I hope that any of our drawdowns over time within our live returns will be far insignificant to those of our green months, where we have very high upside volatility inherently because of how we structure the portfolio and how we're betting on outsized volatility that the market is not pricing in. Outside of the live returns within the social arbitrage fund, we also have returns of a personal account over a far longer period, and that is what this graphic represents here. This historical returns graphic was not all within the social arbitrage fund, as the prior graphic was the actual live returns of the fund itself. This is more a representation of the long-term viability of the strategy, and how we will be able to continue to show these outsized returns more and more over time. And what I also like to express within our fund and express to our investors constantly is we want investors in the social arbitrage fund who, one, understand our strategy and what we're doing, but two, understand that Ticker Trends business and the social arbitrage fund are essentially a technology business which is constantly evolving and growing. So what we're also very excited to show is the application of the improvements in our technology over time. And I think already with our more recent returns, this will be seen, but I think this will be seen even more over time as returns essentially speak for themselves. And that's why we like to post our returns publicly on our Twitter account, through email to our mailing list, to potential investors, on our deck, which is available publicly. And we place these returns everywhere along with investor messages, even to prospecting investors, so that everyone has as much information as possible to make a decision on if the social arbitrage fund is the right hedge fund and asset manager for them. So if you're interested in the social arbitrage fund and what we're doing at Ticker Trends, I highly recommend you reach out. We are very flexible in terms of making sure that our investors feel comfortable and knowledgeable in what we're doing. And of course, we hope, and I personally believe very strongly, that our returns will just continue to display that over time in terms of our ability to gain an edge in the market and take advantage of mispriced opportunities while having as low of correlation as possible to the broader market overall, although still significantly outperforming the broader market. If you are interested, feel free to reach out to us through our email, admin@tickertrends.io, or find our website, tickertrends.io/fund, where you can also learn more about the social arbitrage fund. I'm very excited for the future of Ticker Trends and our business, both the data business and the asset management business, the social arbitrage fund. And I'm very excited to continue to keep you up to date, both through my videos, through our email list, and through our Twitter account and many other public locations where we create content so that you can see the continued success of our strategy. Thank you so much, and I'll see you in the next video.